in the chat room right now, and we're going to also cover some of the markets that are moving and have my attention, but also look at some of the questions that you guys have, and we're going to go through this right now. So again, to kick off the premium video, a little bit of live chat room Q&A. All right, so to start with, one of the first things that we want to be aware of in the morning, and I'm going to bring the view over here, is those of you that are asking, Rog, why the long side, and why did you not ever want to go short? Are there opportunities to short? There sure are. You know, quite a few of you mentioned the negative 2 V-score got us in, but the positive 2 V-score, the +2, got us out. All right, got us out. And the idea was what? Well, as long as the yen is weak, we want to focus exclusively on the long side of equity indices, S&P, NASDAQ specifically. So these are your 2 weakest currencies. These are your 2 strongest currencies. We use the one-day relative performance from FinViz to do that. Okay. Now, as long as that's weak, you know, the yen didn't leapfrog up to +3, or, you know, the third strongest or fourth strongest. It stayed weak, either the first or second weakest, going back and forth with the euro all day long. And this is a significantly weak yen, and that's going to help propel equities higher. So that's why we have that bias to the upside, where we're focused on buying into exhaustion, right? Waiting for support, buying into exhaustion. All right. So that helps us with the directional bias. And that's, by the way, one of the first things that we do. All right. That's one of the first things that we do in the morning. What else are we assessing? We're assessing, and this is another part of the morning, and we can do this before the bell and be ready with all this, is we look at the what we call V-score extremes between 7 a.m. Eastern and the bell, so 9:30. And one thing you'll notice were the -2 bounces. And that was also another reason that we bought into that -2 test here. Another reason, all right? So if you don't know the extremes, you're not going to be aware that the market's been bouncing between -2 and the mean, or the 0, all day, or all up till that point, all morning long until the bell on that V-score. Now, a common question I get is, what is the V-score? So V-score is something that I made up, right? There's no such thing as a V-score. There's not an indicator called a V-score. It's like the wave or the grab candles or the HPMR. It's just a creation, okay? So V stands for, the V of V-score stands for the volume weighted average price, the VWAP, as it's called. All right, so the pronunciation is V as in app, right? VWAP, that's how you say it. All right, the score part of V-score stands for a Z-score. All right, and this is just a measurement used in statistics to measure something, whatever it is, in this case the VWAP, to measure its relationship from an average, aka the mean. All right, and it's measured in, you guessed it, standard deviations from the mean. So we're looking at a study of standard deviation of the VWAP. Now, I've tested around things like M scores and S scores, and I tested MACDs and stochastics and all sorts of weird things, just because I one day realized this standard deviation measurement, you can plug it into a little formula and go, oh, okay. And for probably a good 10 years, I don't know how long I've been doing it, I would do this manually on the daily time frames. This is a pretty old indicator. And then right around the time we were doing the submarket sonar class, and I wasn't going to include this tool. I was just going to focus on volume profile and volume weighted average price. And my partner here in the office, she said, what's that? And I said, that's this V-score thing. You see me, write it down in my journal for years. She's been working here with me since the simpler Forex days, back when we used to do currencies and focus on Forex, back in the simpler Forex days. And she said, you've got to put the V-score in the package. I said, really? I'm not so sure. This is one of those things that, I've used for a really long time. I don't know how it's going to look on the graph. She said, show it to Eric. Eric's going to figure it out. Sure enough, we not only have a V-score for end of day, like I've done for a really long time, we have it for intraday too. So for those of you that are wondering, what is it? It's just V-score is just something I made up, but It's based off the Z-score, which is the standard deviation measurement of something. Its relationship to the average measured in terms of standard deviations from the mean, right? So says the English major. Get curious. I think one of the best things that I've done personally as a trader is find productive distractions and imagine making yourself an indicator. Or let's say you're not, you're Rug, I don't want to build an indicator. I would have thought to test a Z-score on the VWAP. That's not my thing. Okay, then think about building a system. Think about building an automated system. Like I would need this, and this to look this way at this time, and then I would buy. And then, imagine being a systems builder, an algos builder. And that practice mentally is going to force you into noticing or building a process. So everything we do is process driven. All right, speaking of process, why did we persist to the long side after our first V-score fade? That's what I like to call these. We faded the weakness by buying into it at the -2 V-score. Now, why did we persist in buying the rest of the day? We did that because the yen remained weak, and then we had the initial balance breach. It has to happen before 11:30. This was cutting it pretty darn close, but we had the initial balance breach, IB breach, okay? And then once that happens, it opens the door to buying at the VWAP. Now, I have an image that I shared with you all, and I'm going to go grab that right now. It's in today's session notes that I sent out to everybody already, but let me see if I can't show you guys the notes. I do have it around here somewhere. Give me one moment and I'll show you guys. Oh, here it is. All right. So I sent this image out to everybody because once we got the second, see the first VWAP test really wasn't a true initial balance test. Yes, you could have bought it. We talked about it in the chat room live. We talked about the wave as an aggro. We talked about the VWAP as a conservative, right? And even this one technically wasn't the initial balance confirmed VWAP buy. This was though, right? And, I was in the room and I was sort of observing a lot of folks kind of going, oh, I'm not sure if I want to hang into this. How long do I stay? And so I created some notes for you all, hopefully in an effort to clarify, how long, what kind of patience do you need? And you'll notice here, after the initial balance breach, right? After the initial balance breach, what is it that we want to do? What kind of tolerance are we going to have for the VWAP as it may not stay within the cluster, right? So I could look to the V-score, right? I could look to the V-score, which was getting wobbly too. I totally agree. I could look to nearby major and minor psychological levels. We really didn't have one. Maybe 80, but that was too far up. How about 2350, too far down? Really didn't help me there. What else? I think this is a really important one. Now, you guys have to determine this for yourself, but are you losing more than 10 to 25% of the premium that you bought on the options? Now, you'll know that one of the things I've been advocating in this specific environment is options, because right now the volatility is so wide. In order to keep the ability to sort of hang on like a rodeo cowboy, this wild market, when we know directionally we're on the right side, all right, what we want to do is say, give me a tool where I know if all hell breaks loose, I won't lose more than X. And that's what options on the futures or options on the ETF do for us. So this is where that 239 or 240 call that coincided with the pullback made sense. I want to risk more than 10 to 25% of the premium, and as long as it doesn't affect my entire account more than 3%, right? So on a 10K account, you've got to be comfortable kind of with a wiggle of about $250 to $300. That's on the low end of the market money math of what I feel is an acceptable amount of risk. Okay? Now, ultimately, and this isn't for everybody, as long as we're above the clearing range, I'm willing to be a buyer. Right? I'm willing to hang on. But that risk is not for everybody. I think it's also important to look at other tools that would confirm the strength. The yen was still unbelievably weak. I may not want to be long anymore, but I sure as heck don't want to flip short, right? And I think when you look at these collectively, not just pick one, but step back and look at all of them. Did we smash the V-score? No. No, we really didn't. I mean, last time we pulled back, just below the zeros, right? We didn't smash the V-score. We didn't see a bunch of yen strength. The premium value was barely lower because we were just flitting around, right? As you can see. So I think when you look at all these collectively, it's going to be a whole lot easier to hang on to the kind of elastic, right? I'm kind of calling these elastic levels. They're a lot stretchier than they normally are, right? They're giving a lot more than they normally would. So we have to know and be ready to handle that. Okay. So then that was pretty much the day. Now, for those of you that are wondering, would we take this? I would have no problem taking a move like that into, the last, this is 3 o'clock, as you can see right here. I don't have a problem with taking that into the last hour of the day, but I won't take something like this because here we are right on top of the close, right? So I don't want to do that. You could, but I really don't want to do that. This one I'm even sort of meh about, but it's early in that last hour of the day. So even that would have been, all right. And the same breakdown could be done on the NQ as well. We pretty much were focusing on the ES and then the NQ relatedly. All right. Why not the YM and the RTY? I actually did not like the structure of the V-score. I didn't like this. Haven't liked the price structure of either one of those two. And quite frankly, in this environment, gang, I would say that tech has been more resilient. So if I'm buying something, it feels a little bit easier to be buying tech. If I want to short something, it's actually been a little easier to short the Dow or the S&P when it starts tracking with the Dow. Think about what's heavy. Think about what's been wanting to rally. And so S&P and NAS have been a little bit more comfortable to get long in. But the truth of the matter is I think S&P and NAS have just had better structure throughout the week, because if you look at all our trades, our live trades in the room, they've been mostly S&P and NASDAQ. All right. So that's the day trading of the day. All right. Let's shift gears here to a handful of now we've been mostly day trading in the room, right? As you guys know. So let's shift gears to a couple other markets that there's been some questions about. Gang, the lower we get to this area, and quite frankly, the closer we get, and we're bouncing off it again, that V-score 0 reading. Let me clean this up just a little bit. Oop, that's not what I wanted to do. Let's see, studies, enable. Okay, here we go. All right, see how we're getting close to that 0 again? Look, I don't have a downtrend here. Many of you that took the TOPS class, I don't have a downtrend. This is still potentially an oversold zone for gold. I'm not making gold a priority to buy, but for those of you that are asking me, can I buy gold? Right now, gang, that's the only thing I still can do. If I want to short gold, it's got to be an intraday day trade. But on the end of day chart, I'm still only allowed to be long gold. Ditto bonds, right? We talked quite a bit about bonds. I'm only allowed to be long bonds. I mean, this one's a little bit easier than gold because it's still a double green. It's volatile, yes. I mean, gosh, what isn't? But this is still a double green. So only thing we can do is be long bonds, and preferably as close to the 55 EMA as possible, as close to a +1 V-score as possible. So some of you might say, Rog, I did get it aggressively. Rog, I didn't get it aggressively. That's okay either way. If you got it aggressively and you knew it was aggressive, no problem. If you're waiting for the 55, and we might get another shot. Who the heck knows? This has been a wild market. But to the upside, I'm looking for a 180 initial target. I'm looking for a 180 initial target. All right. So then we have let's jump on over to crude oil. A lot of people ask me about lows in crude. Gang, wrong question. Bottoms are a process. Bottoms are a process. So, on one hand, we have this max, we have 2 hits on this V-score right here. Is that tempting to maybe play a bounce? It is, It is. But in a downtrend, gang, the question of where the low is the wrong question to ask. In a downtrend, we don't ask, can I buy this low? In a downtrend, we ask, which high, which rally can I short, right? That's the shift in the questions. That's the paradigm shift that we want to make in terms of some of these major markets. And then finally, I do want to touch on yen before we wrap this up. And that is, we don't want to play the yen against the US dollar. And this is where the Forex conversation comes into play. And we'll dive into some currencies tomorrow in the chat room when I see you all for the close and for the midday. I'll see you guys for the midday and the close. We'll talk about currencies and some other commodities that are on my radar. But there are better places to buy yen than the dollar. In fact, we want to be long dollar, not short dollar, right? We're better off being long dollar against the Australian and New Zealand dollars. We're better off being long dollars against the long yen again across the Australian dollar and New Zealand dollar. Okay, those are some of the weakest currencies out there, followed by the franc and then followed by the pound. Your best dollar and yen buys are going to be against Australian dollar, New Zealand dollar, Canadian dollar, and the Great British Pound. Okay, and that wraps up our premium video for today. All right, I'll see you guys in the next update.